if the U.S. gets involved or attacks. Iran has said they will respond on U.S. interests in the region, and specifically they said shipping interests. The broader impact, probably not so significant, but it would cut off access to the UAE's port of Jebel Ali in Dubai. And that is a major transshipment hub.
Welcome back to Container Bytes. I don't know what number this is because I just looked back and found that we had two number 14s. God, I can't do anything right. Either way, we're going to dive right in. There's a ton of stuff to discuss. In the past couple of years, I've seen something else happen all the time that just mess around with global freight. Of course, we have something like that for you today. Judah, let's start with what is happening with Iran. Less on the geopolitics, more on what is the impact for international freight.
Yeah, so there are a few potential impacts. It's kind of crazy. I think last week in our previous pod, we were talking about Venezuela. But now we're talking about Iran. So there are a few potential impacts, and that, that's not to say how likely any of these scenarios are. One of them is that Iran has issued a statement saying that if the U.S. gets involved or attacks, or, I don't know the degree to which they have to take action in order for this to happen, but Iran has said they will respond on U.S. interests in the region, and specifically they said shipping interests. So that could mean a number of things in terms of the broader markets. One of the things that potentially could happen is that Iran could move to kind of blockade or close the Strait of Hormuz, which would impact maritime trade. So the biggest impact would be on oil flows. So something like 20-30% of global oil passes through the strait. From a container perspective, it probably wouldn't be that disruptive. Only about 2-3% of global container volumes go through the strait. So it would really be kind of a limited impact to ports in the region. So ports of the Middle East would be directly impacted. The broader impact, probably not so significant, but it would cut off access to the UAE's port of Jebel Ali in Dubai. And that is a major transshipment hub. So a lot of goods that are coming from the Far East will pass through Dubai and then go on to other parts of the Middle East, but also Mediterranean and Europe. There's a lot of ocean to air that goes through Dubai also. So shipments going by ocean and then switch to air going on to Europe. So that would be disruptive. You'd probably see some congestion and increases at alternatives like transshipment hubs in India instead. But overall, I don't think it would be the biggest disruption. The other possibility is that if the regime in Iran topples, that might kind of hasten the return to the Red Sea, because the Houthis are supported by Iran. If all of a sudden that support disappears, that might mean a quicker or more sense of security for shipments going through there. So that's kind of the other thing.
That's not even talking about the tariffs, which actually has like a real hit home for U.S. importers, right?
Yeah. The third thing is that President Trump issued a statement, and this was on social media. There's no executive order yet, but saying that there's 25% tariffs on any country doing trade with Iran. And China is Iran's largest trading partner. Something like 25% of Iranian exports go to Iran, but go to China by value. And that would be a big hit. So we kind of have this status quo of de-escalation between China and the U.S. In terms of trade, in terms of tariffs. If all of a sudden there's an increase of 25% tariffs on China, we're likely to see China respond. We know there was a lot of back and forth in October with rare earth metals and things like that, so that could shake things up in terms of trade.
We have this survey that we've been discussing about tariffs that we ran across small businesses, and what keeps on coming up is that it's not necessarily the size of the tariff, which does matter, but it's more when are new little gut punches coming, and the reliability and the resilience that you can build around it, and especially smaller importers that don't necessarily have the strategic bench in order to build that out. So really something to pay attention to. Speaking of smaller U.S. Importers, we took a look back at the data over the past couple of years and tried to chart out when pre-Lunar New Year surges come in and when it usually starts to pop a little bit. I know the Lunar New Year this year is going to hit on February 17th. For those who haven't been through that before, basically means total shutdown of exports from China. And we typically see peak search activity, at least like the red zone before that, coming in about 4 weeks before. So really beginning in a week or so. What are you anticipating for Lunar New Year coming up?
Yeah, so if we start for Asia or Europe, we saw a Lunar New Year demand already start maybe a couple weeks ago, which is earlier than usual. It kind of makes sense on that lane because of Red Sea diversions. That means a longer lead time. If shippers in Europe don't get goods out before Lunar New Year, they're going to have a much longer wait to get goods afterwards. So we've seen rates really, climbing through Q4, but really since mid-December, they've climbed. They continue to stay elevated to start the year. To Europe, rates are about $3,000. To Mediterranean, $4,800. Carriers are adding capacity, so there's been a lot of capacity reductions to keep rates up, and now carriers are adding capacity, and some carriers are announcing additional GRIs, rate increases for mid-month, up to $4,000, so another $1,000 jump to Europe, and up to $5,500 to the Mediterranean. There's some skepticism that they're going to be able to push rates that much higher because maybe since we've had this early start, we're going to start to see early trail off as well. We've started to see higher rates for the Trans-Pacific as well, and that's, as you said, about 4 weeks before is when it would start, so it would make sense to start about now. But it seems like the last couple of weeks has also been a pickup.
So what are like the exact Transpac price changes kind of recently?
Yeah, so as I said, rates have started to climb since mid-December. They continued to climb to start the year and have stayed elevated. To the West Coast, rates are at about $2,750, and to the East Coast, $4,000. So that's quite elevated. There are some forwarders who are already saying that their carriers are reaching out with discounts. So it's possible that, this is where rates are going to kind of peak or stay more or less and maybe recede a little bit. But it definitely seems like Lunar New Year is starting.
What are we seeing on the air cargo front? Is that typically as impacted by Lunar New Year?
Yeah, so not immediately, right? Air cargo, because it's a much shorter turnaround. You don't see that kind of front loading that much ahead of time. So we're really in the kind of the post-peak lull for air cargo right now. In terms of air cargo rates, they've continued to fall on the Trans-Pacific. China, US are down below $6 for the first time since October. We're seeing Southeast Asia to US also slumping below $4. So that's really the story now, is that we're post-peak. As you get closer to Lunar New Year, it's possible you'll see a little bit of a bump, and then also afterwards, if shippers are having some orders that need to be expedited. So that's kind of a slow season for now in here.
I just want to encourage everybody. We have, I think, two bangers of an article that Judas dropped recently that he won't promote himself, but I will. One, kind of what to expect from 2026, and another one coming up soon about overcapacity shipbuilding that's going on and what the long-term impact of the industry might be. If you want to check those out, just head to the Freightos website and look for freight industry updates. You can also sign up for a free weekly email and get the data that Judah's talking about directly to your inbox. So definitely take a look at that. Judah, thanks so much for joining. See you next week.
Thank you.